Welcome to day 62 of me backtesting my way to success. First trade was a loss, and the reasons why I entered were the equilibrium from the swing low to the swing high, a liquidity sweep from right here into this 4-hour fair value gap, and inside of the golden zone I entered on the break of structure right here. Take profits were previous areas of liquidity right here, and also the swing high. The reason as to why I lost was probably because, well, for one, you can see market is really going sideways right here. It's not really going anywhere, just staying inside of this low and high made. It's really just consolidating right now. So maybe that's why the equilibrium and the Fibonacci golden zone were not that valid. And also because, yeah, I think it's just mainly because of my equilibrium slash Fibonacci. Because had I, for example, used this one, swing high to the swing low, yeah, as you can see, it went into this fair value gap, just barely dipped into the golden zone right here, and then it probably broke structure in the lower time frames. Could have entered for trade like right here, but pretty late, so I just shouldn't have taken this trade because my equilibrium was placed incorrectly. So let's just see how the next one goes. And the next trade was also a loss, and the reasons why I entered were this 4-hour fair value gap right here, equilibrium from the swing high to the swing low, since we're bearish. I wanted to enter inside of the golden zone again, but price just pushed through it and kind of reversed at this area, and so I was looking for more confluences. The only confluence I could find was this 15-minute breaker block, and so it made sense a lot. And on a good break of structure, I entered. Take profit was only the swing low of the equilibrium, since like this area was it was not a good area of liquidity. I was considering placing my one and only take profit actually right here at this area, but I did it at the swing low, which I guess something I can learn from this trade is definitely like right here, price didn't take out my TP, as you can see, it just reversed before taking it out. And I think what I can learn from this trade is that when that happens, I should move my stop loss to the break even so that I don't lose money. I don't gain anything either, but at least I don't lose any money. And I mean, my prediction was kind of right, but my stop loss was, my take profit was too low, I think. I think it would have been way better had I placed it a bit higher. So let's just see how the next trade goes. And the last trade for today's episode was a win, and the reasons why I entered were 4-hour fair value gap, 4-hour order block, equilibrium from the swing low to the swing high. I wanted to wait for price to go into this golden zone, but then this huge wick appeared for like the third or fourth time this session alone. And I looked at it a couple of times before, and I thought I could analyze it, but it didn't make sense because sometimes it just ignored the confluence after the huge wick, and sometimes it respected it. And so I have no idea how this huge wick, like what it does to my confluences, because it looks like, I mean, it kind of looks like it's news, you know. And so I entered on a break of structure right here. As you can see, take profit was the swing high. I only placed one take profit, stop loss below this huge wick. It's annoying me. And yeah, that's already it for today's episode. We'll see you on the next one.